How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily up dollar versus Japanese yen. As we talked about in the previous episode, we were speculating that Australian dollar versus Japanese yen was most likely going to continue trending higher because we broke a swing high, and other intermarket analysis told us that it was going to go higher. So we were also comparing other yen crosses. We were looking at the dollar, we were looking at Japanese yen futures, and we speculated Japanese yen was declining in a bearish trend, which would allow for all the yen crosses to trade higher. As you can see today in result from Asian session, London and New York, price continue to go up. Very volatile to the upside. So we talked about that in the previous episode. Prices continuing to trade higher. The reason I am taking the stance of being bullish was because I saw all the other yen crosses creating false breaks. I saw Japanese yen futures continue to create a lower swing high formation while this was breaking a swing high. So we know the market is moving in market symmetry or market code. The strong reason why I selected Australian dollar versus Japanese yen was basically because it was strong versus weak. So let's just recap on that again. The interest rate differential is pretty strong in between these currencies as well. And the reason I picked this pair for the month was because last month's range was small. It wasn't large. So I was anticipating that this month, February, would kick into a large range cycle. The same way we have a small and large range cycle on the daily, the weekly, is the same thing on the monthly. So I'm using that to filter certain pairs that are likely to be a lot more volatile and have a larger range expansion for the month. So I'm anticipating that Australian dollar versus Japanese yen is going to have a large expansion this month. And we can see already it's starting to pick up. And after that last down close candle, we could see buying, 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 buying. So this is almost as if a filter or a futuristic, I can't even find the words to say. This is like almost as if we knew we had to buy after that, after the speculation that yen was getting weaker. So price is continuing to trade higher. I'm expecting it to do what? Raid buy side liquidity above swing highs. Get back up to the 20-day high potentially as well. And even a 60-day high. These are all relatively equal highs. These are clean highs. There's buy side liquidity residing above that high. So if we're going to see this trend higher, I want to see it take out swing highs and create higher swing lows. Let's just take a look at other yen crosses as well. NJ flying. As you can see, flying. A higher swing low will be expected in the near future. It could land inside this fair value gap as well, right? When price finally retraces, it's probably going to fill one of these fair value gaps and then move higher or trade off of a down close candle or some type of order block theory. Trades back into this candle and probably trades higher. Not trying to guess every single thing, but just having an idea, right? Being intellectually gifted or experienced in the market. Today, small range cycle. So not much yet, which is expected. After a large candle, you'd expect a lot of people to already be chasing. They're already too late to the party. The next day they try to go long, full margin, and the pair doesn't go anywhere. So that's not something that I would be surprised that happens. EJ, same thing, right? Nothing today. Just the luck of the draw. The market happened to flip back into a small range cycle. There's a reason why I don't like to trade Fridays mainly. Don't like to trade Fridays. GJ, same thing. Small range cycle. Not much. But what are retail traders going to say here? I don't know what's going on in the market. Yeah, they clearly don't because they don't know the natural price cycle to the market. Small to large, large to small. After large days, do not expect another large day. It could happen. I'm not saying it won't, but it could happen. Understand, small, large. Let's just take a look here. Look how small this is, a small down candle here on January 9th. Look at the next day, very large. January 10th on Wednesday, large. What happens the next day? Small. So that's a cycle that you'll normally see. It's almost as a light switch went on and then they turned it off. And everybody's like, where did the party go? Where did liquidity go? Where did the volume go? What am I doing wrong? You don't understand price. And I'm trying to show that day to day, day to day. This is why we talk about these things. It's all the small things, small range, and it's down too. Like, let's say this candle, in the next 8 hours, this candle closes down, look to buy, right? Because if this market is going to trend up, it's going to trend away from down candles. It's a pretty obvious thing. It's a pretty natural thing to see in an uptrend. Look at this uptrend. Within this leg up, look at how price reacts after the down candles. It runs away from it. Down candle, it runs away. Down candle, it runs away. And then it starts accumulating again, right? January, accumulation. February, we should see that manipulation come in and then price trade away, right? Some type of quarterly shift start to turn. Maybe February is where the major quarterly shifts happens for the yearly candle, or maybe it's the next month, maybe it's March, right? But that's what we're looking for. I know it's a lot at times, but you got to take your time. The things I tell you guys may be coming very fast, or like, oh, how does he know this? Or how does Deontay know that it's going to do this? Experience. Been doing this for 7 years now. I've seen this 100 times over and over and over again. And as you start to see, oh, these are just natural characteristics, natural traits to the market. I do not have a indicator on my chart. No RSI, no moving average. Hey, I'm not trying to bash anybody that uses those things, but indicators are detrimental to a trader's development. You're depending on a lagging indicator to tell you when to buy, when to sell, when buying pressure is coming in, when selling pressure is coming in. All that stuff is nonsense. Believe me, it is nonsense. It is all nonsense. What else do we have? And that's the yields. Yields are still going up, so we know dollar's still strong. Right? Bond yields going up. That means dollar's strong. Right? Correct. And let's look at UJ. Still going up too. I'm gonna look at the yen cross as well. Go to UJ. Still trading higher. Right? Still going higher. Higher swing low formation. Right? That's a bullish trend that you're seeing here. This is a clear bullish trend. Prices going up higher. Now let's look at Japanese yen futures. And look how opposite it looks to all the yen crosses. Intermarket analysis. You got to be looking at other pairs. You can't be blind. You can't be blind. You have to look at all the asset classes. I'm looking at the Japanese yen futures. Look at this. False break. We talked about this at the beginning of the month in the daily updates. False break, question mark, because I wasn't sure, right? I'm not assuming that it's going to be a false break. It could not be. It could have continued trending higher. It could have did this instead. But I said, it could possibly be a false break. But if it's going to be a false break, it needs to come back down and take out a swing low. So it breaks a swing high, takes out a swing low. Oh, it is a false break. Confirmed. Now, do we see price go lower? Do we create a lower swing high? We do. Lower swing high after breaking the swing low. And what are we doing? We're making lower swing highs and lower swing lows. We're in a bearish trend, folks. I'm showing you how to read day-to-day price action. There are going to be times where the market does stall, and we have to wait on our hands, right? Look at this trading environment here. We would have to wait, and that's weeks on end. But people are not patient enough to do that. Unless you have something inside your arsenal that can allow you to scalp or catch a small day trade on these days here, then you use that. You utilize that. But if you don't have something in your arsenal where you can take day trades, short-term trades for 10, 15, 20 pips, maybe even sometimes 40, ideally, then you don't trade. You sit on the sidelines and you're waiting for the daily bias to kick back in so you can understand which direction you should trade in. Trading against the trend can be harmful, can be very harmful. Think about this. The market is trending down. For you to guess that this day here was going to close up, that's very difficult. For you to guess that this day was going to trade up, that's very difficult. It happens on a Thursday, so it could have been the low of the week. But these days are probably more difficult. And the odds of you catching this in a downtrend, very unlikely. Very unlikely. For a day trade, at least, right? For a London and New York session trade, probably unlikely. But since it's going down, I would rather look for selling opportunities. Wait for price to break a previous daily high. Wait for price to break buy side liquidity. Wait for price to go above New York session's opening price, London's opening price, Asian session opening price. Take out some type of liquidity pool and go short. You roll the dice. Not to say you're gonna get it right, folks. You're not gonna get it right every single day. But sooner or later, you are going to be right on par with what the commercial speculators are doing, right on par where the market makers are doing. What I'm showing you exactly is what the market makers are thinking and processing. Not saying it's exactly word for word, letter for letter, but it's very close to exactly what they're doing. And I try to paint that story to you guys in the way I'm breaking it down. False break. Okay, are they getting retail traders in long? Oh yeah, they most likely are because if they did that and then came back, oh, they got everybody long. So that at this point, retail traders are probably still thinking, oh, it's still long. It's still long, right? And they're very optimistic and they want to hold trades longer. They want to open up their stop loss larger. Now, this is supposed to be a short video, but it's a little longer. But I really want to emphasize on certain things that traders are just getting wrong. The quality of their trades are just not on par. They're taking trades on the wrong side. They're selling in a discount. They're buying in a premium for the day. Logically doesn't make sense. You got to look at it as a market maker. Put your shoes on as if you were the market maker. Step into their shoes. How would you get the public to go on the wrong side? How would you convince everybody that Japanese yen was going to go long? Run a swing high. Run a swing high. Print a couple green candles up and then drop price. That's what I would do. Same thing vice versa. Let's look at AJ actually, since we're tracking AJ. Let's not get off track. Same thing vice versa here. What would you do if you were the market makers and you wanted to get price here? From the beginning of the month, I would pull them down. I would get everybody to go short first. And then I would use them as sponsorship. Thank you for your sell orders. I'm going to use that for my buy orders now. And then push it all the way back up. So far, this is the low of the month. And look at that. It's a swing low formation. 1, 2, 3. When the market makers or the algorithm is ready to move the price action, it's going to happen in 3 bars. Since we're on the daily time frame, the daily chart, it's going to happen in 3 days. Now, hence, let's say we were on the weekly chart, it would happen in 3 weeks. Let's say we are on the monthly chart, it would happen in 3 months. Think about it. Look at this turning point. 1, 2, 3. It's 3 weeks for this swing low to happen. Oops. It's 3 weeks for this swing high to happen here. 1, 2, 3, and then it trends down. It's happening in 3 bars. Same thing on the monthly. It's no different. How did this turning point happen here for March to come down here? 3 bars. 1, 2, 3. 3 months. 3 bars. Turns around. Same thing here. How did price get up here? It had to been some type of turning point. Let's take 2022 turning point here. Now I know there's a lot, but I'm just picking off quick ones here. Swing low. 1, 2, 3. 3 months. It took 3 months. Think about that. It took 3 entire months for AJ to turn around to go up this way. It's logic. It didn't take 6 bars or 6 months. It took 3 months. It's a quick decision. Catches a lot of people off guard. It's 3 bars, guys. If anybody tells you that a swing low or a swing high or any swing point is more than 3 bars, they are lying to you. I want you to know that. It's coming from my mouth. They are lying to you. It takes 3 bars to make a turning point. It may not be confirmed in 3 bars, but in theory, it takes 3 bars for the market to say, I'm changing my direction. You can see it here. 1, 2, 3. You can see it here. 1, 2, 3. You could see it here. 1, 2, 3. What are we doing here for February? We're anticipating it to continue going up. Think about it, guys. 1, 2, 3. If this is a higher swing low via monthly, right here, December 2023 was higher than October 23. That swing low formation's higher. Are we speculating it should go higher? Yes, we are. Same with all the other yen crosses. And the same could probably be seen with dollar, right? UCAD, UJ, U Swissy, and vice versa. GU, AU, NU, EU. We see those are bearish. Don't be blatantly oblivious to what's going on in the market trends on the monthly, weekly, and daily. Right? I had folks tell me publicly on TradingView, right? Publicly on other platforms telling me, why would I ever look at the monthly chart? That's ridiculous. Why would I ever look at the weekly chart? That's ridiculous. No, it's not ridiculous. How else are you going to understand where the market's going? Yes, we are day traders. Yes, we are swing traders. Yes, we are position traders. Well, mainly concerned for day traders. Yes, we are day traders, right? Majority of traders are day traders or scalpers, whatever you want to call themselves. You need to know where the trend is going. And yes, I'm very passionate about it because I want people to be in the understanding, right? I want you guys to be informed. I don't want you to come to my platform, come to my channel and not be informed. And I'm just telling you, oh, buy now, sell now. That doesn't help you because sooner or later, right? Deontay's not going to do this anymore publicly or privately. I don't charge anybody for this stuff. It's all free. But at one point in time, I'm going to say, hey, I said all I could say. I gave all my blessings to the community. I gave all the knowledge I can from my own experiences, trying to teach people from my point of view how I like to trade and how I like to make it simpler for myself and how I find success and how I become profitable and how I become a full-time trader. I don't do these things just because I want people's money. No, I don't charge anybody nothing because I want everybody to win. I want every single one of you guys to win. I don't want nobody to lose. Those that know. And those that can't win, hey, eventually you'll have your time. Your comprehension is just not there. You may take a couple more years to get there, but eventually you will get on par because I'm saying the same things every single month, every single day. Same model every night at 8 p.m. I don't change nothing. I want you guys to understand consistency will beat talent. You don't have to have a huge amount of comprehension. But if you have a model that is efficient, you stick to it. Don't change the plan. If you understand how to find daily bias, don't switch how you find daily bias. If you know how to find draws on liquidity, why are you changing it? Why are you looking at other methods? If it ain't broke, why fix it? You know how many times people will come and comment under my videos and say, "Hey, what about this? What about that?" That's cool and all, and I agree with them, and I don't disagree with them. I agree and sometimes disagree, but I tell them, "Hey, that's a good point of view. I'm glad that you saw that. Now you made me see that." But however, I am going to be truthful, and I'm going to stick to my horse. I'm not jumping off my horse and jumping on another horse. I'm not doing that because I know what works, and what works for me may work for you as well. And I see that many of you guys are finding success in the teachings that I'm putting out, and it makes you want to continue doing this. But eventually, one day, Deontay is going to say, "Hey, it's been great, guys. This chapter is done, and I'm going to have to live my life. I'm going to have to raise my family, my future family. I'm going to have to take care of, my parents. I'm going to have to do all other things that are way more important than trading." Like I said, it's not about trading. I always try to tell people all the time, you're doing this not mainly for you. I mean, some people may not have a family or might not have a partner, but most of us, majority of us, it's not for us. It's for the future generations. It's not for me, right? It's for my lady. It's for my mom. It's for my dad. It's for my brother. It's for my cousins. It's for my whole family tree. Somebody in the family has to make it. How else do we get wealthy? How else do we start generational wealth? Somebody has to do it. And if it ain't me, I know it's got to be my son or my daughter, or it's got to be my wife, or it's got to be someone else in the family tree that's going to do it. But I know I'm taking the initiative and I'm putting that foot forward. I'm going to do it. Me, Deontay, I'm going to be the one that's wealthy in the family. I'm the one that's going to sacrifice years, right? Who's going to sacrifice his 20s to understand this market and find a skill set that nobody else has in the family. Right? Oh, Deontay, what are you doing? You do this thing with candles and this. You're trading stocks? Everybody thinks I'm trading stocks. It's so funny to me. Everybody thinks I'm trading stocks in my family. I'm like, no, I trade foreign exchange. I trade currencies. You're like, what? It's not the same? I'm like, no, it's not. It's kind of similar, but it's not. You know? But I took the initiative to take on this challenge, to go down this path. And I want you guys to do the same. And I believe in each and every one of you guys. I appreciate all the support, the comments, the questions, etc. Challenge me too. Ask me questions. DM me. You guys know if you DM me, I will respond to you. I know I get a few hundred a day, but I respond to almost every single one. I try my best. Hopefully you find this insightful. Before we end, real quick, I want to see price get to this swing high here. If we get any down close candles, That's a new buying opportunity. A higher swing low is going to form.